Have you ever wondered, what if NVTS delivers strong earnings, but the stock still crashes? Or what if the numbers look average, yet Wall Street sends it soaring? That's exactly why this earnings report could become one of the biggest turning points for Navitas Semiconductor investors. Today we're looking at what could happen before earnings, the biggest risks, the biggest opportunities, and later I'll share what I would personally do with NVTS. Stay until the end because one factor most investors are ignoring could decide where this stock goes next. Let's begin. Whenever earnings season arrives, most people only look at revenue and earnings per share, but experienced investors know that's only part of the story. For a growth company like Navitas, guidance is often much more important than the actual numbers. Wall Street wants to know one thing. Is the business growing fast enough to justify future expectations? If management gives strong guidance for AI infrastructure, EV charging, data centers, and industrial markets, investors may overlook weak profits. But if management sounds cautious, even a decent earnings report may not be enough to keep the stock moving higher. That's why guidance is the number one thing I'll be watching. Now here's something many people misunderstand. Navitas isn't trying to become another NVIDIA. Instead, the company focuses on power semiconductors using gallium nitride and silicon carbide technology. These chips don't create artificial intelligence. They help power AI systems more efficiently. As AI servers become larger and consume more electricity, efficient power management becomes extremely valuable. The same is true for electric vehicles, renewable energy, and ultra-fast charging systems. This is exactly why investors continue paying attention to NVTS despite the stock's volatility. But here's where things get interesting. Great technology alone doesn't make a great investment. The company still needs to prove it can increase revenue, improve margins, reduce losses, and win more customers. That's what Wall Street will be looking for during this earnings report. Another important factor is customer expansion. Has Navitas signed new partnerships? Are existing customers increasing orders? Is demand improving compared to last quarter? Even one positive announcement during the earnings call could completely change investor sentiment because the market doesn't simply react to numbers. It reacts to future expectations. And right now, expectations may matter more than ever. Now let's talk about what could happen after earnings. NVTS has been one of those stocks capable of making huge moves in a very short period. That's both exciting and risky. If management delivers strong revenue growth and raises future guidance, investors could quickly become optimistic again. Momentum stocks often move much faster than people expect. But the opposite is also true. If guidance disappoints or management sounds uncertain about future demand, the market could react negatively even if the earnings numbers look decent. That's why this report is so important. Now here's my personal opinion. If I already owned NVTS, I would probably hold my shares through earnings. Why? Because selling just before a major catalyst could mean missing a powerful rally if the results surprise investors. However, if I didn't own the stock today, I personally wouldn't buy a huge position all at once. Instead, I'd slowly build a position over time. That strategy reduces risk if the stock falls after earnings while still giving exposure. If the company surprises to the upside, as for price expectations, no one can accurately predict short-term stock movements. If earnings and guidance clearly beat expectations, I think NVTS could revisit higher resistance levels over the coming weeks. If results disappoint, the stock may experience another sharp pullback before buyers step in again. Looking beyond this quarter, I still believe Navitas has an interesting long-term opportunity because demand for efficient power chips should continue growing as AI, electric vehicles, and advanced electronics expand worldwide. But remember, the company still has to execute. Technology alone isn't enough. Consistent revenue growth, improving profitability, and strong customer wins will ultimately determine where this stock goes over the next few years. So now I want to hear from you. Before earnings, would you buy, would you hold, or would you sell NVTS? Tell me your answer in the comments, and don't forget to explain why. If you enjoyed this analysis, hit the like button, subscribe to the channel, and turn on notifications, because I'll be covering the earnings results as soon as they're released. See you guys.